Hi, I'm Rob.
And I'm Rob.
And this is Ask Rob and Rob.
Welcome to Ask Rob and Rob, that staple of a Tuesday where your property questions get answered. Matthew and Jay have stepped up this week with some wonderful questions that we're going to be answering in short order. But first, we just need a quick reminder of how to send your question in.
You can leave us a voicemail by going to 013 808 0035, or you can go via our lovely website, propertyhub.net/ask. It's really easy to do, which is great because we get lovely questions like we have this week. The first of which is from Matthew.
Hi lads, great podcast. Really enjoy listening to you. However, the situation I'm in is I've got 100 grand saved up in the bank and I'd like to get into property. Now, I'm just looking for a bit of advice from yourselves. Should I still get into property? I'm looking for property to buy, maybe for 250, and to live in, maybe hopefully less, or buy to let. Ideally, I'd like to buy a house to live in and to let out. What is your advice on buying houses at this moment?
Matthew, thank you for the question. And I feel for you because there's so much going on in the world. What does it all mean for anyone in any part of life, let alone investing? I think it's easier, though, to get some perspective on it when you've been investing for a while. But when you've been saving up, you've saved up a lot of money, you've probably worked hard to do it, and now you're trying to get the confidence to actually go and spend it all and invest in something. That's a hard thing to do even when the world is relatively normal, but particularly difficult now. So how can we help you out? Well, if you haven't already, I strongly recommend you go back and listen to some of our episodes over the last couple of months, because we've been talking, as you'd expect, extensively about coronavirus and the response to coronavirus and what this all means for house prices, for investing, and so on. And in particular, you should listen to episode 378. That's one where I talk about a purchase that I've just made. Now, the fact that I've just bought a property doesn't mean that you should, because we're in very different situations. But in that, I lay out my thought process for why I did it and some of the factors that I considered. And even though our situations are different, you'll probably find that the type of things you'll be thinking about are the same, even if the conclusions you come to about them are different. But to summarise, for me, there are three main things to be thinking about to determine whether you should be investing right now. The first and probably the most important is your time frame. So if you're thinking about making an investment for the next few years, then wanting to have made your money by then and potentially get out, then you probably shouldn't be investing now, because it's very difficult to say what the next couple of years are going to look like. But if you're looking at the next 20 years, and by the sound of it, you are thinking long term here, it's a lot easier to be relaxed, because you can say, well, whatever happens in the next couple, it's pretty sure that over the next 20, things will work out okay. The second factor is your opinion about where the market's going to go in the shorter term. And this is just an opinion. So if you think it's nailed on that prices are going to crash within the next 6 months, then it probably doesn't make any sense for you to be buying right now. It's well worth bearing in mind, of course, that any opinion that you have is just an opinion, and anything that you hear from anyone else is also just an opinion. No one actually knows. So you can never actually be too confident about that factor. And the third element is the deal itself. Now is not the time to be doing an average deal or one that's a bit borderline. In a market like this, there will be the opportunity to do really great deals. So if you decide that now is a decent time, don't rush into the first opportunity that comes along. Again, that's a particularly difficult thing to do when you're just starting out, because you might not have a clear idea of what a good deal is or how good you can get, or you might not know how to evaluate certain risks and opportunities. So it is hard, but it's still important. This is where your network comes in. It's very difficult for you on your own as a new investor to know what deals you should and shouldn't be doing, especially at a time like this when getting that right is so important. So if you haven't already, make it a priority to develop a network in property. That doesn't have to be anything particularly formal, certainly doesn't have to be a mentor, can just be people on a forum like the Property Hub forum who you can turn to for a bit of advice. I think if you do those things, so you listen to our episodes and so you can hear what we think, you use the factors that we've talked about to come to your own view about what you should be doing, and then build your network so you're not making these decisions on your own, then you should be in a position to make better decisions and help the uncertain condition that the world is in right now work to your advantage.
Plenty for you to go out there, Matthew, and everyone else listening. Next up, move away from property. We're talking the stock market with a question in from Jay.
Hi guys, just want to say a big thank you first and foremost for all the help and all the advice that you give on the show. It's absolutely invaluable. My question today is actually about the stock market. And one thing that I've noticed in the last week, in light of some stimulus announcements from the USA and the UK, there's slow incremental rises in the stock markets as a whole. My question is, do you think now would be a good time to invest, or do you think the markets may drop again in the next couple of weeks or so? I know nobody's got a crystal ball, but it'd be nice to hear your predictions. Thanks.
Well, thank you, Jay. Thank you for giving me the excuse to talk about the stock market in the first place by asking this question. I think there's a lot of people interested in the stock market, especially during the type of climate we're in at the moment, because it's a lot more volatile. For those who don't follow it as closely, when the coronavirus kind of reared its head, the stock market quickly collapsed. Obviously, that was triggered by the coronavirus, but it wasn't entirely unexpected. A crash was expected in many circles. Lots of people had been predicting a crash was on the way. The trigger, obviously, not that many people predicted. So what's going to happen now? Because while the stock market did collapse, it's recovered quite strongly, particularly in America. Well, I think we're due at least another wobble and probably a correction, so a double-digit fall from where we are today. And we're recording this in the middle of June 2020. Now, that's my opinion, and I may be wrong, but I think it's interesting to look at people who have possibly got a little bit more experience than myself. And I don't know if you're familiar with that Warren Buffett. He's pretty big into the stocks game, and I think it's fascinating to really observe what he's doing right now, because he's famous for the quote to say that be greedy when others are fearful and be fearful when others are greedy, which basically means that when everything's up in the air and everyone's panicking, invest. So has he been making big moves over the last few weeks, particularly when the market dropped? He has, but possibly not in the way you'd expect, because Warren Buffett has actually been selling more than he's been investing in. And I think that's fascinating, because after the 2008 crash, he invested in a big way. He also, before the coronavirus hit, was sitting on a huge cash stockpile that his investors were very much encouraging him to use to make big investments. And he was keeping his powder dry and saying, no, I'm going to wait for the right opportunities. So I think it's fascinating that he doesn't think the right opportunities are now. I think it's even more interesting when you actually look what he's been selling, because he owns a variety of stocks and a variety of companies. But where he's reduced his holdings quite heavily have been in airlines, and that can be understandable, and also banks. He's reduced his holdings in banks as well. So he obviously has a working theory. He's not publicly telling people that, but what you can do is just follow the actions of the best in the world at their game and take a view, and obviously come to your own conclusions. But as Warren Buffett isn't on the show, I can only tell you what I think, and for me, right now, I'd just be waiting to see. You might miss the opportunity and the market might carry on, and investment advisors would probably tell you that you should always invest for the long term anyway, which is what we say about property. And that's all true. But for me, the stock market's more of an interest thing rather than a wealth changing thing. So before I make any investment, which will only be small, I'm just going to wait a little while longer to see what happens. But ultimately, Jay, you have to make your own decisions and calls. Hopefully, the info helps.
So that's us done for another episode of Ask Rob and Rob. Thank you to Matthew and Jay for your questions. And if you've got a question of your own, as you've heard, it doesn't have to be strictly about property. That's okay. Get that question in. 013 808 0035 is the number, or you can go to propertyhub.net/ask. Only a couple of days to wait until your next property podcast fix, because we're going to be back, of course, on Thursday. So we'll see you then. Bye-bye.
Bye-bye.